Hi guys, and welcome back again. Today we will be looking at, once again, we're working through the ICB Bookkeeping to Trial Balance textbook, and the exercise we will be doing will be learning example 4A from learning module 4, recording credit and sundry transactions. Last time we looked at the cash book receipts, the cash book payments, and we looked at the petty cash. So this time we will basically be looking at all of them and just see how it works into the business. So I hope you guys enjoyed the previous one. If you haven't seen that one, you are more than welcome to have a look at it. Okay, now first of all, let me just re-explain this. How do you know which transaction goes into which journal? Remember, you have got 4 main accounts. And in your journals, your main accounts are always your VAT inclusive accounts. You've got bank, debtors, creditors, and petty cash. So whatever increases your bank, in other words, whatever debits your bank, is a cash book receipts. Whatever decreases your bank or credits your bank goes into cash book payments. The same goes with debtors. Whatever increases your debtors goes into the debtors journal. Whatever credits your debtors account goes into your debtors allowance journal. Then your creditors, whatever increases your creditors, which is on the credit side, goes into your creditors journal, and whichever decreases your creditors, which is on the debit side, goes into the creditors allowance journal. And then the petty cash, whatever decreases your petty cash, your credit side, goes into your petty cash journal, and anything else goes into the general journals. Now there are some exceptions to the rule, but we will handle them as we go along. So I'm going to do this exercise exactly the same way as I did the previous one. We will look at the problem, we will do the T accounts, figure out which journal it goes to, and then we will take it from there. So if you're happy, we can start. So learning example 4A, I'm not going to read the full introduction, but it does say that the business marks all their goods up at a constant markup percentage, a markup of 50%. So in other words, once again, we will be working with the markup percentage and not the gross margin percentage. If that said it had a profit on the sales, then you will be using your markup percentage. All right, so let's have a look at number 1. So, a personal computer to the value of 3,000 Rand. Oh, sorry about that. Before I continue, if you do not have the Bookkeeping to Trial Balance ICB textbook in front of you, just take notes as we go along. I will be explaining as we go along, and just fill everything in. Have a template of the journals in front of you. Have a template in front of you, and then just fill the things in as we go. All right. So first of all, cash book receipts, cash book payments, your creditors, creditors allowance journal, debtors allowance journal, petty cash journal, as well as your general journal. Okay, and then the cash book receipts has got your document number, day, details, folio, analysis of receipt, bank, debtors control, VAT output, sales, and then your sundry accounts. And then in the little column here, your cost of sales and trading inventory. Your cash book payments, document number, day, name of payee, folio, bank, creditors control, VAT input, trading inventory, and your sundry accounts, which is your amount, folio, and details. Your creditors journal is a document number, day, details, folio, creditors control, VAT input, trading inventory, and your sundry accounts. Creditors allowance journal is your document number, day, details, folio, creditors control, VAT output, trading inventory, and your sundry accounts. your debtors journal. It's your document number, day, details, folio, debtors control, VAT output, your sales, and then cost of sales and trading inventory in that last little column. Your debtors allowance journal is your document number, your day, details, folio, debtors control, VAT input, sales returns, cost of sales and trading inventory in that last little column. Then your petty cash is your document number, day, details, folio, petty cash, postage and stationery, staff refreshments, VAT input, and your sundry accounts. And then last but not least, your general ledger, or your general journal, sorry, your document number, day, details, folio, debit, and credit. Okay, so if you have your templates in front of you, just complete those headings, and then we will carry on from there. All right, now we can start. Okay, it says a personal computer to the value of 3,000 Rand. SARS has allowed the owner to claim back the full VAT amount of the value of this computer. Journal voucher JV1 was issued, and the cash invoice he initiated received in his personal capacity, as well as the SARS depreciation schedules were used as supporting documents, waka waka waka. So the main point there is the owner gave a computer to the value of 3,000 Rand to the business. SARS said that he is allowed to claim back that money. So let's quickly have a look at this. So let's do our T accounts. So now what did we say when the owner contributes either money or equipment? That is your capital, which is an equity, so it's debit minus and plus on the credit side. Then he gave a computer. A computer is seen as your equipment. So the other leg is equipment, which is an asset, so debit plus credit minus, and then VAT input, because it is money that SARS said he can claim back. VAT output is money that you need to pay towards SARS. VAT input is money you can claim back from SARS. Okay, so the capital, and your capital is always a credit. Drawings, when he takes money from the business, is always a debit. So remember, so this is a capital, a credit of 3,000 Rand. Now the equipment will be the 3,000 divided by 1.14, which would be to get the VAT exclusive amount. So the VAT exclusive amount is your equipment increase, because let's face it, the business gained the equipment. Sorry, I've got my notes on that side, so if I look at that side, it's just to look on my notes. It's 2631.58. And then the VAT input is an asset, so debit plus credit minus. The VAT amount is 3,000 minus 2631.58, and that is 368.42. Okay, so now we need to find out which journal must this go in. It's capital, equipment, and VAT input. So it doesn't touch the bank, it doesn't touch debtors or creditors or petty cash. So in other words, this will go into your general journal. So let me get my pen. Now, it's a very good practice. When you do your general journal, you write your debits first and then your credits. So the document number then will be JV1. Your day will be the first. And then let's look which ones are the debits. It's equipment. And you've got your debit amount. Your debit amount is 2631.58. Then the other debit is your VAT input. So you write that on the debit side again, 368.42. And then lastly is your capital, which is your credit. And that is 3,000. Now after you've written all of that, you can just write a little explanation of what happened there. So here we can just say the capital contribution by the owner. You just write that in brackets, then you just take your ruler and you close that off for that one transaction. And there we've done our first transaction in our general journal. All right. So, yeah, capital, equipment, and that input. Great. So let's do the next one quickly. Okay. And remember, I just want to highlight all the ones we've done so that I do not get confused. Okay, good stuff. Next. A personal check was drawn in favor of the business of 20,000 Rand. The amount was directly deposited into the business bank account. All right. So let's have a look at that. So first of all, it says a check was drawn. So we know it's bank, which is asset plus minus, and a personal check was drawn in favor of the business. A personal check, so in other words, what have we got there again? It's the owner making a financial contribution towards the business, so that'll then be capital. Now since nothing was purchased or sold, you cannot claim VAT back on a cash, and there were no items involved, so you cannot claim VAT back on a cash transaction. So in other words, your bank increased with 20,000, and then your capital increased with 20,000. So now once again, it's a credit. So now we can see which book will this one go into. Your bank increased, so in other words, that'll be your cash book receipts. And since it was paid in directly into our bank account, it will only show on the bank statement, so your document number will be BS. Okay, that doesn't sound good, but it stands for bank statement. It's the first. Your details will be Leroy Ungaretti, or the owner, whatever you want to do there. It was paid directly into the bank account, so it does not go into the analysis of receipts. I did explain the analysis of receipts and the bank in our previous lesson. So bank is 20,000. Then debtors, VAT doesn't get touched, sales doesn't get VAT touched. So the sundry accounts will be 20,000 and capital. Great stuff. Let me just highlight this one, and done, and done, and done. Okay, let's do the next one. And like I said previously, this is going to be a very long lesson, because some of these things have got quite a lot of calculations to do, but we will take it as we go along. All right, the loan statement from AAA Bank, shows a debit for 1849.32, being for interest on the loan taken out on 2 March, Waka Waka. The loan accrues interest at 15% per annum. It also reflects a credit for 2420.02, which constitutes the first installment on this loan. The bank statement for the current bank account reflects the debit order for the installment. Okay, so long story short, the loan statement you get from AAA Bank, it shows a debit of 1849, and it also reflects a credit of 2420. Okay, so let's quickly have a look. Okay, so the first thing that they spoke of, the first one, let's do the first one first, which will be the interest on the loan. So it's interest on loan, and that will be your, it's an expense because you have to pay it, and then your loan from a bank, which is your liability, it's minus plus. Okay, so in other words, your account is gaining this interest. So in other words, your loan amount is an expense because you have to pay it. The expense is always a debit, and that is 1849.32. And then your loan amount increases now with 1849.32. Okay, so that is the first part. So let's have a look now. Which journal will it go through? It talks about the interest on loan and the loan from a bank. So it doesn't touch your bank, your debtors, creditors, or petty cash. So that one will go into your general journal. So let's do this one quickly. Then it's JV2. The day is 2. Your debit is the interest on loan, which is 1849.32. And then your loan of a bank as a credit of 1849.32. So the little explanation is basically your interest charged on loan. And let's draw a line. Okay, so that then is the first part. So the second part to that transaction, it talks about, it reflects a credit for 2420. So remember, the debit on the bank statement is money that we owe them. If it's on the credit side, it means it's money that we paid. Okay, sorry, I just want to mark all my stuff again. I really do not want to get confused. Okay, so let's look at the second part of that question. Okay, so first of all, here's my pen. Here we go. So it's bank. And it will be again loan on a bank. So bank is an asset plus minus. Your loan is a liability minus plus. So in other words, the 2420.02 is money that we paid towards the loan. So our bank decreased with, what's the amount, 2420.02. And that means our liability also decreased with 2420.02. Okay, so now once again, this will also go, okay, bank decreased. So if your bank decreased, it's money that we paid, it goes into your cash book payments. Alright, so let's have a look at that. And once again, that will reflect on your bank statement. So the document number is BS. The date is the 2nd. Who did we pay? The name of payee is A bank. So we paid 2420.02. And then the amount in the sundry accounts. In the sundry accounts will be 2420.02. And that will be loan, loan from a bank. Okay, so now we've done that one. Sorry. Okay, and we've done that one now. Excellent. So let's look at the next one. Just remember when they say a debit on the loan statement, it's money that gets accrued that we have to pay in. And then when it's a credit, it means it's money that we have paid. I did explain last time how the bank sees us. We are a loan to a bank is an asset, but it's a liability to us. So yeah, you can go work that out. So let's have a look at the next one. Okay, purchased merchandise on credit. So we purchased on credit. So in other words, remember, a debtor is somebody that buys on credit from you. A creditor is someone that you buy on credit for. So we purchased merchandise on credit from Geronimo's and received their credit invoice TX5 for 84102.04. 84102.04 less a 2% trade discount. Okay, so first of all, we purchased on credit, so this will be creditor's control for Geronimo's. And since creditors is a liability, it's minus plus. Then what did we buy? We bought trading inventory, which is an asset, so it's plus minus. And then we've got our VAT, so let's say we bought, so since we did buy on credit, but money is still going out, so that'll be VAT input, which will be an asset plus minus. Okay, so now they say that we purchased the merchandise on credit from Geronimo's, but we received a 2% trade discount. Okay, so in other words, we are not paying the 84102.04. We will be paying less than that. So let's go calculate and see how much money will we actually be paying. Okay, I'm just gonna write it here now. I've got a little formula that I always use to calculate stuff like this. So first of all, I always say, I say 84102.04 equals 100% of the price. Okay. 84102.0 equals 100% of the price. But we are getting a 2% trade discount. So in other words, we only need to calculate 98% of that price. So that will be X. Okay, so now to get the X on the top, we just flip it. So it will be X over 84102.04 equals, and now we flip the other side as well, 98 divided by 100. So then X will be, and if you get your calculator out, it's so to get the X alone on the one side, I hope everybody's done business literacy, because this will be very easy then. It will be 98 over 100, because you bring it over, it's divided on this side, so if you bring it over, you multiply it on the other side, 84102.04. So that'll be 98 divided by 100 multiplied by 84102.04. And that gives you a total of 82419, well, 0.99, so we can just say 82420. Okay, so we paid 824.20. So in other, liability minus plus, okay. So 824 There's going to be quite a few of these little examples. So there are other ways as well to do it. If I've got time, I will explain them during the next few lessons while we do this exercise. Okay, so let's have a look. So let me see. So my creditors control increased because we bought on credit. So our creditors increased, our liability increased to 82420. Now our trading, we bought trading inventory, so our trading inventory increased, so that will be a debit of 82420 divided by 1.14, and that is 72298.25. Just want to see if I'm correct. 72298.25, and then the VAT input amount is 10121.75. Okay, so now we can go and look and see in which book will we write this. We see our creditors control is increasing, so in other words, that will go into your creditors journal. So here's the creditors journal. Let's quickly have a look. So the top document number they tell us is TX5. The day is the 5th. Details, who did we buy from? It's Geronimo's. Your creditors control, remember the creditors control is your main account. Your main account is always your VAT inclusive amount. So in creditors control we write 82420. Your VAT input amount is 10121.75, and we purchase trading inventory, and that is 72298.25, and then that is your creditors. Great stuff. Doing well. And mark. All right. So let's just delete all. Delete. Let's just wipe all that. Okay. So let's see what's next. Purchase trading inventory by check from high-low traders for 17,000. Okay. It will more or less be the same as the previous one, except we didn't buy on credit, we bought by check. So in other words, it says we bought by check. So your first leg will be bank, which is an asset plus minus. We purchase trading inventory, which is also an asset, debit plus, credit minus, and then let's say we purchase and money went out, so it's VAT input. If you missed that lesson, go look at the previous ones about how to calculate what is VAT input, what is VAT output. That's an asset as well, plus minus. Okay, so first of all, the bank decreases because we paid for 17,000. And remember, once again, your bank, your main account is your VAT inclusive amount. Then your trading inventory will be 17,000 divided by 1.14, and that gives you 14912.28. Your VAT input will then be 17,000 minus your trading inventory amount, and that'll give you 2087.72. Okay, now once again we go look in which journal will this be. Your bank is decreasing, so that'll be your cash book payments. So document number will be number 10. The day is the 5. We bought from high-low traders. Okay, then the bank 17,000. the VAT input 2087.72, trading inventory 14912.28. Great stuff, great stuff. Right. All right. The next, okay, our next little exercise, or our next transaction, returned goods of inferior quality to Geronimo's and received a credit note for 6,900 Rand. All right. So let's go draw out the accounts again. So first of all, what did we buy at Geronimo's? You can see creditors, so we did purchase on credit. All right. So once again, we purchased on credit. They give us a credit note. So it's once again creditors control for Geronimo's. It's a liability minus plus. Okay, what did we buy from them? We purchased trading inventory. Trading inventory is an asset plus minus, and then VAT. Now, to calculate, okay, when you look at which journal, I mean, when we did the previous exercise with Geronimo's, we purchased from there, so our liabilities increased, so that was on the debit. So the creditors allowance journal is the exact opposite of creditors journal. So in other words, if your creditors journal is VAT input, your creditors allowance journal will automatically be VAT output. Okay. So that's VAT output, and that's a liability minus plus. So whatever we did with that transaction of Geronimo's in the creditors journal, we're going to do the exact opposite of it right now, because we need to reverse that transaction. So let's just quickly have a look again. We returned goods of inferior quality to Geronimo's and received their credit note. So in other words, our creditors decreasing 6,900 Rand. Our trading inventory, well, am I right now? Yeah, creditors decreasing. Our trading inventory is decreasing at the VAT exclusive amount of 6052.563, and then obviously the VAT that we could claim there will have to be reversed as well, and the VAT amount is 847. That's on the credit side, 847.37. Okay, so it's the exact reversal of what we did previously, is where we gained trading inventory. Now we are losing it because obviously we are taking it away. We are taking it back to them. So we're not going to have this on our floor anymore. So it's a reversal of that. So now here we can see our creditors is decreasing on the debit side. So when your creditors decrease, that goes into your creditors allowance journal. So let's quickly complete that one. So the document number will be RE2. Your day will be the 7th. It's Geronimo's. Then creditors control is 6900. Your VAT output is 84737, and your trading inventory 6052.63. Okay. So that's just one thing. You have to look at your previous transaction and then just reverse it in your creditors allowance journal, and the same will go for your debtors journal and your debtors allowance journal. Okay, we just mark again. Okay, and we've got that one. Great. So let's just wipe this quickly, and then we will do the next one. And please remember, if there's something that you are unclear about, feel free to email me on the email address that's on the description side of this video, and I'll be more than happy to try and assist you. Thank you so much for the emails that has come through, and I'm glad to hear and to see that everything is working out for you, and that you guys understand what you're doing. Sometimes I know it's difficult talking through, with a camera, because I can't get any feedback, but I would like to help you beyond the video as well. I love accounting and I love helping people, so please feel free to contact me. All right, let's see now, the date number 8. Okay. Sold goods on credit to runway dealers and issued credit invoice D1. The VAT exclusive price was 4,000 Rand. All right, let's go play with this one. So now we've got that one. 1, 2, 3. But now once again, remember what did we say last time? When you do a sale, you don't just do the sale, you don't just get the money in, you need to account for the cost of the item leaving your business to get to your profit, as well as the trading inventory leaving your store. So don't forget that. So we've got our regulars, which will be, they bought on credit, so it's debtors control, which is an asset plus minus. A sale took place, so it's sales is an equity, debit minus credit plus, and then money came in, so that'll be VAT output, money we have to pay back to SARS, liability minus plus. Okay, so let's have a look at it. So they say, the VAT exclusive price was 4,000. So in other words, our sales amount, our income was 4,000, because that is your VAT exclusive side. So now to calculate the VAT, you just say 4,000 times 14%, and that gives you, where am I now? 560. So your VAT output is then 560. So your VAT inclusive amount, remember your debtors are increasing, so it's 4,000 plus 560, and that gives you 4,560. So let's go have a look at what we've got here. So our debtors are increasing. When your debtors increase, it goes into your debtors journal. So let's quickly complete our debtors journal. Who did we buy for, by the way? It's runway dealers. So where is it? Here we go. Document number is D1. The day is the 8th. Details we bought from runway dealers. Your debtors control is 4,560. VAT output is 560, and then your sales 4,000. But now we need to remember, we've got the cost of sales and the trading inventory that we also need to go calculate. So let's quickly do that. Oh, I'm running out of space. So first of all, let's say trading inventory, it's an asset, so it's debit plus credit minus, and then your cost of sales. It's an equity minus plus. All right. So now we need to go look and calculate with the magic block with the magic block how we're going to do this. Alright, so let's say we've got our cost price, our profit and our selling price. It's a markup percentage, remember, so cost price is 100, profit is 50%, selling price 150. Now we've already got the VAT exclusive selling price there, which is 4,000. So now you take 4,000 divided by 150, multiply by 100, and that gives you 2666.67. Now that amount we will fill in here in the debtors control under the cost of sales trading inventory, 2666.67. Awesome. And I've just need my highlighter again. So now we've done that. We've done that. Done that. And we've done that. Okay. Great stuff. Let me wipe up again. I really hope that this is helping somebody here. Or somebody listening. Just so you guys can't really see what I'm writing. That would have made life a lot easier, but I hope that you do have the textbook in front of you, so then it will be easy to follow. Great, so let's go have a look. Okay, sold 2 type F couches to Jane Knoxer for cash. Alright. And it's 7,000 Rand each, less 2.5% trade discount. And cash invoice CV3 was issued. Okay, so sold 2 type F couches, 7,000 each, less 2.5% trade discount. Great. So in other words, it was the one leg is bank, because it is cash. Then we did a sale, it's equity minus plus, and then we've got VAT output. Liability minus plus. Alright, so now we need to go, first of all, go calculate and see how much, because she paid 7,000 less 2.5% trade discount. So she bought 2 couches, so that'll be 7,000 plus 7,000. That gives you 14,000 Rand. Now once again, we are going to use that other formula of mine. So the 14,000 represents 100% of the price. So all you say is you write 14,000 equals 100. But she got a 2.5% trade discount. So in other words, it's 100 minus 2.5%. So we need to calculate 97.5% of the price. That's X. So let's turn it around. It's X over 14,000 equals 97.5 over 100. So X will be 97.5 over 100 multiplied by 14,000. And that gives you 13,650 Rand. Okay, so let's put that in here. So the bank increased with 13,650. Our sales went up with a VAT exclusive amount of 11,973.68, and our VAT output credited with 1676.32. Okay, so let's go put that. The bank increased, in other words, that'll be our cash book. That'll be our cash book receipts. So let's quickly have a look at that. It is CV3 The day is the 8th. It was a cash sale. So we just write that. Analysis of receipt will be 13650. We're not going to do the bank yet. Of course, we do the bank when we check all the deposit slips when we actually went out and banked the money. Okay, so it's 17,000, and then we just complete this. The VAT output was 1676.32, and then our sales is 11973.68. But now once again, we need to take the cost and the trading inventory of stock. So let's quickly do that. Okay. Alright. Sorry, I need my two calculations. So the one is trading inventory. Asset plus minus, and then cost of sales. Okay, but now one thing that we need to remember, one thing you need to remember is the cost that we are calculating here is the cost price that we bought the items for. Alright, so in other words, you do not take into consideration the discount that you gave your client. Because when you bought the product, you didn't get a discount. You didn't get a discount when you bought it. You're giving your client a discount. So in other words, that cost of sales that we are going to calculate here is on the original price before any discount was granted. Okay, so that one also needs, you need to remember it. If you give somebody a discount and you need to calculate the cost, you calculate the original cost by which you purchased the product. So that will be the cost before a discount was issued. So what do we work off then? Then we work off the original 14,000. The original 14,000 Rand. But remember, the magic block works with VAT exclusive. So that'll be 14,000 divided by 1.14.